Hey everybody, a little birdie just told me that scores came back and you just failed the REG exam. That's brutal. I failed the REG exam myself when I was taking these exams, so I've been there. At the end of the day, the regulation exam is testing you on a bunch of rules outlined by the Internal Revenue Code, which, let's be honest, isn't the most riveting rulebook in the world. Regardless of your tax background, the regulation exam can be very challenging stuff, but it's not rocket science. The good news is, this is a tax-heavy exam, which at first you might be like, what is this guy talking about? How is that good news? Well, all I'm saying is that this is a math-heavy exam, and the kind of math that I'm talking about is really just adding and subtracting. But it's also not that simple. The reality is, there are a lot of rules when understanding what needs to be added and what needs to be subtracted. So I'm not going to assume that everybody is in the same situation, and there really isn't a one-size-fits-all scenario for every candidate. Everybody learns differently. But one thing remains the same. In order to truly understand the intuition behind these concepts, you must see what's actually happening. So with that being said, I could be talking to two different candidates out there. So if I'm talking to a candidate that scored less than a 60%, you might be thinking, how can this have happened? I got C's all the time in school. Why can't I get a 75%? Let me assure you, a 75% on the CPA exam is not the same as getting a C in college. In fact, it's nowhere close. So if you are somebody who got less than a 60%, let's take a step back and ask ourselves, how did this really happen? Did I really just get a bad testlet? Or do I maybe just not know the intuition behind these complicated topics? You gotta ask yourself, do I even know the fundamental differences between a C corporation and an S corporation or a partnership? Do I know that C corporations are going to be separately taxed entities, whereas partnerships and S corps are pass-through entities? Do I know how many shareholders or partners are eligible for each entity? Did I memorize different formulas, such as the dividends received deduction, and call it a day? Do I know that accumulated earnings tax only applies to C corporations? Did I even bother looking at business law? My guess is that you already know the answers to these questions. Look, and if the answers to these questions are less than ideal, I'm not saying that you're destined for failure. All I'm saying is that it's time to kick this into a second gear. Okay, so let's give ourselves 24 hours to cry about this. And then let's get back to the drawing board. But this time around, let's ask ourselves the why. If you're a visual learner, check out Universal CPA Review. Because unlike other traditional CPA review courses, we don't just talk at you about the Internal Revenue Code, nor do we assume that you've been a tax advisor for 20 plus years. We also don't just assume that you're fluent in the language of tax, but what we will assume is that you are like us. At Universal CPA Review, we deliver our materials from the student's perspective. We take a tutor-like approach, and we bring things back to the basics. So if you did score less than a 60%, while I know it might be hard to see the light at the end of this tunnel, the good news is that you already have a foundation built in your brain. Now the light bulb must turn on. We must actually see it. Now, if I'm talking to somebody who scored between a 60 and a 74%, first of all, I'm so sorry. When I was taking these exams, I scored a 71% on the REG exam on my first try. I was miserable because I thought that I actually knew everything. But when I went back and I tweaked my approach, I realized how many points I was missing because I didn't fully see the whole picture. So even though it might feel dumb, I want you to jump in front of a mirror and ask yourself some hard questions. Okay, do I know what's included versus excluded in gross income? Do I understand interest income and what interest income items are taxable versus what is tax exempt? Thinking about interest income from state and local bonds, sometimes referred to as municipal bonds. How about interest income from Guam or Puerto Rico bonds? Those are technically part of the United States, so wouldn't they also be included? How about interest income from Series EE bonds? Do I know the little tricks to start by memorizing what is tax exempt? Can I look at myself in the mirror and recite every single itemized deduction in the individual tax section? Do I know the differences in what is classified as an adjustment versus an itemized deduction? There's no excuse in getting this wrong. Hint, hint, student loan interest is an adjustment. While individual tax is the most memorizable section of the REG exam, we can't sleep on the little details such as qualified business income or passive activity losses. But that's okay, because at Universal CPA Review, we don't just ask you to memorize words or rules or walk you through some of the most intricate and robust topics in a monotone voice by some dude named Alan or Glenn. Look, I have nothing against the names Alan or Glenn. Those are fine names. But point being is that Universal CPA Review's one and only mission is to get you to understand this stuff and also thoroughly see it. So that way, when you see a property tax question at the Prometric Center, you'll be able to ask yourself, okay, at a high level, what does this exam primarily want me to know related to property tax? Well, it seems to focus a lot on basis and gains and losses from property transactions. Right? When it comes to basis, they want you to know the basis in property that has been acquired, gifted, or inherited. Sure, but when you're thinking about property that has been gifted or inherited, we got to remember little things like special rules are going to apply. Then we need to remember what are those special rules anyway. Things like when it comes to gifted property, we got to know from diligently studying individual tax that the original gift received will be non-taxable to the recipient, right? Because we would have memorized that gifts and inheritances are always non-taxable. That's not all they want you to know. What is their basis in that property? That's a totally different question. We got to be thinking special rules, right? So we're looking for a situation in which the fair market value is less than the book value. Then if we subsequently sell it, special rules are going to kick in. When we're thinking about inherited property, again, we know it's non-taxable to the recipient, but what about their basis? We're immediately thinking step up or step down to fair value, fine. But what if the alternative valuation date is elected? This is what I'm talking about when I say we gotta build a mental map. And most importantly, we gotta be ready for the elephant in the room, that elephant being the entity tax section. Right? This is weighted anywhere between 28 to 38% of your score. It doesn't take a CPA to tell you that that's pretty important. The good news is this isn't rocket science. The even better news is that you don't have to overhaul your approach. You just need to make some tweaks to be fully ready for questions that you see come exam day. While studying, you might think, I've gone through all of the partnership formation questions. I know the difference in non-liquidating versus liquidating distributions for C corporations. I'm scoring really well on my homework. But the problem with this assumption is that the exam isn't going to break out your testlet as the C corporation section of the exam. This is the S corporation section of the exam, or the partnership section of the exam. Unfortunately, it's going to consolidate all of these entities into the test like it's nobody's business. And they're just going to throw these at you at will like rapid fire. But that's okay, because you're going to be ready. This time around, instead of studying these three entities independent from one another, you're going to focus on the four key areas that are being tested. The formation, the taxation, both non-liquidating and liquidating distributions, right? Because it's not about knowing the formation of a C corporation while studying this section in your review course. You got to know the rules and the differences in the formation of a C corporation versus the formation of an S corporation versus the formation of a partnership. It's about scanning a question, right? We're scanning, boom. This is a corporation we're talking about, great. So we're continuing to scan, boom. This is a formation question. Now we can remember our mental map. Right now we can ask ourselves, what are the three questions that they can ask related to the formation of a corporation? Well, they can ask to calculate the basis in the property received by the corporation. They can ask you to calculate the basis to the shareholder and the shares that they received in exchange for their contribution. Or they can also ask you to calculate any gains that would be recognized by the shareholder during that initial contribution. Okay, so this is just an example. Beyond that, we got to know the sneaky taxation rules, such as the dividends received deduction only being applicable to C corporations, and the differences in separately stated versus non-separately stated income items for both partnerships and S-corps. Got to know the distribution orders for non-liquidating distributions for C corporations, right? Hint, hint, earnings and profits. We're going to first distribute from current and then accumulated E&P. Anything after that would be a reduction of basis to zero, and excess would result in a capital gain. For S corporations, the distribution order will start with any S-corp E&P, sometimes known as the AAA account. After those have been exhausted, we need to ask ourselves, do we have any existing earnings and profits that have accumulated from the time that the S-corp existed as a C corporation? You think the IRS is just going to allow you to not pay tax on that stuff? And finally, when you think about partnership non-liquidating distributions, we're not necessarily going to think about earnings and profits. We're now going to be thinking about the assets that are being distributed. Our distribution order will first begin with cash distributions, and secondly, the distribution would come from property. We must remember that gains will only be recognized if cash and cash only exceeds the partner's basis in the partnership. When it comes to ethics, we got to know the differences in the rules for the tax practitioner versus the tax preparer and the taxpayer. A lot of memorization goes into ethics, so this is one area where we got to just get after it and hit the material with repetition. And same goes for business law. The devil's in the details. So we got to know the details related to the smaller topics, such as contracts, agency, secured transactions, suretyship, and bankruptcy. More or less in that order. At the end of the day, there's a lot of information here. So we need to put in the time, and when we get a question wrong, don't just tell yourself, okay, this block of text explained it. Got it, let's just move on. You must understand the why. Why is this happening? Where did I go wrong? Look, I'll be the first person to acknowledge that errors happen all the time. But if you're just sitting there thinking, for whatever reason, I'm just not getting this, then the reality is maybe you're just not truly seeing it. But we're here to help. If you're looking for that 5% difference, Universal CPA Review might be for you. We offer bite-sized digestible video lectures and visual intensive study guides that have been compared to a children's book. In other words, we're trying to make this not-so-easy material a little bit easier. And the even cooler part is that We also offer video explanations for every single multiple choice question and every single task-based simulation. The reality is everybody's a visual learner. We can't just memorize it, we must also see it. Sign up for a free 14-day trial to see what we're really all about. And if you do decide that you like us enough, feel free to apply discount code UNIVERSAL2021 for 25% off any purchase. And last but not least, always remember, if it was easy, everybody would do it. And there's nobody working harder than you.